Welcome back to the News Hub. Fed Chairman Ben Bernanke's second term ends in January, and friends say he's not going to seek a third term. So who's on the short list to replace him? Wall Street Journal's Fed insider Jon Hilsenrath joins us. Jon, good morning.
Good morning.
Okay, so who's on the short list?
We don't know. That's the short answer. So I could tell you who we think is on it. It's a familiar list. People like Janet Yellen, Larry Summers, Roger Ferguson. It's a pretty deep bench, actually. What we do know is that the White House, there's a few important messages here in the story that we have in the paper. One is the White House is starting to fill out this list. Jack Lew, actually the Treasury Secretary, is helping to lead the process. We don't think that it's going to get done, that they're going to have a nomination until the early fall. So we're at a very early stage of this. And that they're talking about this as being an open competition. There's no front runner. And this is why that's important. A lot of people in the market think that Janet Yellen is the clear front runner, that she has this thing by a long margin. And what we're hearing from our sources is that they've got an open mind about this, that nobody has this locked up. So, if your odds-on favorite is Janet Yellen, you actually need to keep an open mind that there are other people out there who could get it.
By the way, with Janet Yellen, I'm curious, has the number two ever been elevated?
Well, no, but I wouldn't put too much weight on that. I mean, when Greenspan was the head of the Fed, he kind of dominated the place, and number twos just kind of came and went every few years. In Janet Yellen, the Bernanke has a very strong number two, and she's also got a very long resume that has to get the attention of the president. She's held just about every job you could possibly hold at the Fed. She's been a staff researcher, she's been a regional bank president, a governor, and now the vice chair. So, I think in some ways she's a special number two.
What are the challenges? We know the challenges, but outline them for us facing the next Fed chairman.
Oh, they're huge. They're immense. The challenges right now are even more acute because the Fed is talking about winding down its bond buying program. So, the next chairman or chairwoman is going to have a huge task because he or she is going to come into office right as this really intense debate is going on about winding down QE3. And that person is going to have to take the reins and make decisions from day one. That's actually an argument for continuity and for having someone like Janet Yellen there. But basically, I mean, the bottom line is this. Bernanke will go down in history as the person who unleashed all these easy money programs on the economy and the financial system. The next person in there is going to be the one who's got to figure out what to do with it and when to take it back. And that could be really, really disruptive.
It's an interesting point you raise because if we look at the last 30 years, you've actually, since Paul Volcker, when we had the prime rate up around 18%, we've had sort of progressively easier money policy ever since then. And do you think that actually can be reversed given the level of debt that's sort of in the economy now?
I do think it can be reversed, and I think the important question is how quickly it's reversed. And I think we need to look at a little bit of history to draw some conclusions on that. The Fed had a huge balance sheet after the Great Depression and after World War II. And that balance sheet relative to GDP came down. It took them decades to wind that thing down. It wasn't until the late 60s or early 70s when the balance sheet got back to its pre-depression level. So it can be a very slow process. Japan has had low interest rates for 30 years already. So I think that the process is going to be slower than people in the markets realize.
Yeah, I suppose it could be tricky because I think if you look back historically, we were a huge net creditor nation at those points. So it was a lot easier to tighten, I suppose. Don't you think?
Well, it's a global market. I mean, the capital flows very seamlessly across our border. So I don't know how much that factor counts, to tell you the truth.
Okay. Well, just that if you raise rates, if you tighten here, and we're the ones that bear the cost because we're the ones that we hold the debt, so to speak. We're not the creditor anymore. But in any way you slice it, it's going to be a challenge. Jon Hilsenrath, thanks so much for joining us.
Yeah.